And this is Ken Kraetzer for CBSI Talking Business, our interview series talking with leaders in the field of banking, insurance, customer service, and business education. All to highlight our team in Harrison, New York. We provide insurance-based benefits to the payments industry. Now, so much happening. We are very glad to be able to call on one of our friends, an expert in advising banks on marketing and strategy, and that is Jim Perry from Market Insights Incorporated, based in Seattle. He's in Michigan, but Jim, how are you today?
Ken, I'm doing great. It's great to see you. Great to have a conversation with you about what's on everybody's mind.
Absolutely. It kind of happened very quickly. The end of last week, Silicon Valley Bank, they posted poor performance and led to a run of depositors and withdrawals. And by the end of the week, they had failed, and then it spread to a bank, Signature Bank in New York. What's your read on what happened and why it happened so quickly?
Well, I think, basically both of those institutions were kind of overexposed to a certain level of risk. Part of it, on the surface of it, you'd think some of the decisions, some of the choices that they made were reasonable in terms of the bonds that they had taken a look at, but they couldn't have really anticipated uh, the quick demand for deposit withdrawals that started to occur, which was actually exacerbated by the digital age that we live in right now. The word was out on social media. You had venture funds, you had others kind of talking it up, and that's what accelerated a lot of this move, this run on the bank. Essentially, I think this is our first true example of the kind of run that can happen. That's why there was such great movement over the weekend to try to shore up confidence and restore confidence in the banking system overall, and to point out that what was going on with these two institutions wasn't the kind of systemic thing that we saw in 2008. People who keep trying to make comparisons between the two, you have to point out all the differences between what happened in '08 and what happened this year. So now, one of the things I have to say is that we're going to be seeing the impact of this and feeling the impact of this for a very long time, both in financial services industry, but in small businesses. I mean, I was just reading this morning, I mean, even Etsy, the online kind of marketplace for so many tiny little household businesses, had to suspend payments for some of its folks because of what was going on with Silicon Valley Bank. And we don't stop and think about the extent to which a bank that had been so focused on the tech sector, so focused on supporting the startup ecosystem, that when you pull that thread, it has a lot of reach to a lot of industries, a lot of households, a lot of consumers, a lot of businesses, and we're still all unpacking that.
Well, certainly the velocity now of how consumers and businesses can move their resources from one institution to another online can be done in a matter of minutes is different, and the reaction, the reaction on social media and the uncertainty that can be created very quickly by
Mhm.
bad economic news that an institution will post. Now, what you've got a broad practice working with banks around the country, and what have your banks been saying, and what have you been advising them that they want to be thinking about and perhaps doing?
Well, primarily, we've been saying two things. First of all, make sure you're looking at your own risk, your own vulnerabilities with clear eyes, with that kind of honest assessment, not with the same filters that we've classically used over, decades, perhaps. You can't kind of approach the topic of risk without doing it through the filter of our digital age. This, somebody who's been in banking for 30 years, 40 years, they may be making decisions relative to risk in the rules of the game from 20 or 30 years ago. Now we're saying, anticipate what would happen if any segment of your portfolio was under risk. As an example, commercial real estate right now. All you have to do is pay close attention to what's happening with vacancies due to hybrid working situations, due to folks kind of pulling out their workforce so they can work entirely remotely. There's going to be a lot of vacancies, and what's going to happen when some of those commercial real estate entities start to default on their loans, right? So these are conversations that you didn't necessarily have to have all the time, but so we're saying, go back in, look at your situation through the filter of what the world is like today, evaluate it, and then communicate to your shareholders, to your board, to your employees, to make sure that they have the reassurance that you've anticipated all those needs. Let's face it, over the last 2.5, 3 years, so many institutions, through the pandemic, through all the rest, have really done all they can do to make sure they're well capitalized. But of course, at the end of last year, I think there was an estimate of about $620 billion in losses on bonds that were on the books, treasury bonds that were on the books, because of what's happened with inflation. So again, evaluate your risk and then be really transparent to your stakeholders to make sure that they know your position, to make sure they can have some level of confidence, not just because of what the president is saying or the Treasury is saying or the FDIC, whatever. Make sure they're hearing from you.
Absolutely, communication is so vital during a period like this for a bank to reach out to its customers in various channels and explain what they're doing and their supervision level. Is there a difference from banks that are primarily consumer to those that are primarily commercial, taking care of commercial customers? I mean, one of the issues that has been cited is that some customers were required to have all of their deposits or cash available in the institution they were borrowing from. And that created a concentration that has, been, created a risk for them. What's your thought on that, on differences that the commercial banks have to do versus consumer oriented?
Well, these are the kinds of things that I think a lot of regulators are going to be having conversations about in these coming months, because clearly this is the type of situation that can put entire ecosystems at risk. And while on the one hand, yes, we want to be the champion for as few regulations that are going to shut down innovation, but at the same time, you've got to say, all right, we're living in a very different world than we were a decade ago, than we were 20 years ago. So let's look at those situations that could very quickly turn south if, again, we see a situation that impacts one sector over another in a very adverse way.
And FDIC insurance has had a limit of $250,000 protection. Um, but a commercial company could have vastly more money in a bank than that. How do commercial clients approach the thought of insurance or protecting uh, the assets they have, the cash they have in a primary bank?
You know, it's a little above my pay grade. Um,
Okay. We
helping
don't
them,
usually get into the finance side so much. We're more a bit marketing.
right, exactly. But I will say this much. I do know, I just saw a post the other day from um, Jill Castilla down in Edmond, Oklahoma, her community bank. You know, she's trying to point to various tools within community bank's toolbox to help those small businesses and commercial clients that they're assisting to kind of spread that risk out through a particular platform. Now, again, I don't know all the details on that, but I think there are ways to mitigate that risk without, talking about establishing um, some new regulation
Okay.
around FDIC insurance.
Okay. Well, it is an unexpected crisis that has come up, but there are factors, as you cited, that have been brewing to this changes. Tell us a little bit about your company, Market Insight, and some of the things you're working on with your clients. Some of your trends for this year.
Sure, Ken, as you know, our firm has been around for now almost 30 years. We've been working with banks and credit unions all over the country to really help them look at their data and make strategic choices that are based on not only their customer or member data, but the information that's available about their market. And so we're constantly reevaluating and looking at what's happening with consumer behaviors. As a matter of fact, one of the speeches that I'm actively kind of giving right now around the country is about what we believe is the upcoming demographic crisis. You know, we thought we were having fun during the pandemic. Honestly, folks, if you look just a little ways ahead, um, because of low birth rate in this country, because of aging boomers, we're going to see some massive shifts that are going to impact our economy. They're going to impact financial services. They're going to impact the workforce in very dramatic ways. So we're trying to give banks and credit unions the heads up to say, look, there are some things that you can do to mitigate that. Let's see, I'm going to be in Little Rock, Arkansas, Kansas City, Traverse City, Michigan,
We're in demand.
Ohio.
What are some of the organizations that you'll be speaking at?
I'll be at Arkansas Bankers. I'll be at Michigan Bankers. I'm actually teaching at the Perry Banking School in Lansing, Michigan for the Michigan Bankers, which is always fun. There I'll be talking about top trends in mobile banking as an example. So
Okay.
yeah,
Well,
lots of.
we'll have to hear a little bit more about that. But do you have a final thought on where you see this crisis hopefully being resolved very soon with no more banks being badly affected? What do you see as where this crisis is going? Hopefully, a resolution soon.
Right before our call, I was trying to take a look at what had happened to some of the other regional players that had been initially causing some concern out in the ecosystem, saying, okay, let's hope we can get through today, tomorrow, the next day without any kind of next shoe to drop, essentially. But I think, as I say, this type of situation is going to have impact that bubbles up over the next weeks and months. So we just have to stay pretty diligent in looking at all the possible, not only ways to take care of what happened this past weekend, but also to find ways to mitigate that in the future.
Okay, Jim Perry from Market Insights Incorporated, based in Seattle, Washington, a senior strategist there. And we're so glad to have a chance to chat and get your thoughts on what's happening with this banking crisis. And we look forward to doing this again soon.
Absolutely, Ken. Anytime.
Okay, great. You have a good rest of the day. And this is Ken Kraetzer for CBSI Talking Business. And at CBSI, we're based in Harrison, New York. We provide insurance benefits to the credit card and payments industry. Thanks again to our friend Jim Perry for joining us today. And have a good rest of the day. Thanks for watching.